started talking about L&T. Let's take the conversation forward because there was favorable news flow around the company yesterday. The company has bagged its largest contract ever from Qatar Energy for offshore hydrocarbon business. BNP Paribas then came out with a note. They quite like the L&T story. They have an outperformed rating on the stock. We have Priyankar Biswas, India analyst, industrials, logistics and metals with us. Priyankar, thanks very much for joining in. So it's a big win, right? 15,000 crores of an order win. How does it play into the overall ordering activity as the year is closing out? I mean, in terms of ordering, I don't think L&T has disappointed anyone. It's just a question of better margins, better execution. Your thoughts, and why are you overweight on the stock?
Yes, thanks for all the relevant questions. In fact, I do recall having this conversation with you guys in earlier episodes as well. So the concern on L&T had typically been like literally for the last 4 quarters that the order inflows won't come. That is what the whole issue was, that the 10% growth that they guided won't come. Now, what you highlighted as a 15,000 crores order, I would say it's more closer to USD 4 billion. So something probably higher than 30,000 crores is what we are speaking about. So that itself takes this year's order inflow based on whatever I estimated to 15% plus rather than what the management has guided at 10%. So clearly the strength is very much there. And what we are saying and what we had put out in the note is that there is not going to be a capex slowdown specifically in Middle East in both CY25 and CY26. And we have put out that the tender pipeline as it prevails today is actually far higher than what it was prevailing at the same time last year. So just to put in comparison, like 235 billion of tender pipeline in Middle East right now versus something like 194 billion. So there is still a lot of growth that we are speaking of. No oil-linked related slowdown is supposed to happen.
All right. That was the fear, right, Priyankar? The recent narrative is that oil price can weaken, so it will impact Middle East capex. But you're not in that camp. You're saying that the Middle East capex is a secular upswing regardless of oil prices. Are we getting that correct?
Yes, right. So if you look at it, let's say from a pre-COVID level, the theory that you were saying used to hold true. That I agree. But if you look at it for the last 3-4 years, Middle East capex is already at its peak despite the oil price hovering around USD 75. One must note that. So the Saudis and the UAE are going for economic diversification, and that is where they have given published tender pipelines. And not all of these are funded by the government specifically. So they are funded by the sovereign wealth funds also. So it's guaranteed funding projects. So unlikely that the order inflows will slow anytime soon in the next year or the year after that. That is how I'll put it.
Priyankar, your target price, I think, on the stock is 4435. So you're seeing fresh highs. I mean, for L&T, the highest, I think, point was just around 4,000. Then the market corrected. Stock cooled off as well. What will drive L&T to that level? You mentioned the order book growth. I mean, this year has been fabulous. It'll end at 15%. In terms of, like I said, revenue and margins, are you penciling in any margin expansion to drive this kind of a stock price performance? And what about the top line growth for FY26?
See, the FY26 top line growth is actually underpinned by the order book that is already present. So there won't be much uncertainty on that end. That is how I'll put it. But yes, there are margin uncertainties. And what I will say is, yes, we are expecting the margins to move up. So this year, let's say we have a expectation of a margin of the core EBITDA margin around 8.3. Next year, we are building it around 8.6. Now, our assessment is based on the fact that, do recall, in 2023, L&T won some very large Saudi Aramco projects. That was sometime in mid of 2023. Now, this should cross the margin recognition threshold in this calendar year. And that is what will drive up the margins. So the energy project margins are somewhere at peak execution around 10%. And if you see a 10% margin projects getting up into the mix versus a 8.3 at an overall, so the natural maths says that the margin expands. So we are building in that. And the other factor that drives in is like, look, L&T's working capital levels are at 12%. Now, one may think that it cannot come down from here, but our view is it can come down to somewhere close to 10.5, 11 as well, because there has been some water-related overdues. And once that comes in, so that is where you will have the working capital is coming down further. And who knows, because of such large cash flows, you may eventually have large payouts as well. And that can drive the thing up.
Priyankar, good morning. What are the other stocks under your coverage?
So we do look at, let's say, Cummins, AIA, and of course, the logistics space.
Okay. Any screaming buys from those areas?
See, we have been quite positive, I would put it that way, on, let's say, JSW Infra. That is a stock that I have been consistently pushing for some time. Because I feel that while the multiples looks optically high, but one must consider that the amount of growth that is happening. So, for example, like you will probably have 21 billion rupees of EBITDA now. And in FY28 to 30, that can jump to anywhere between 90 to 100 billion. So if you consider that, I mean, the level of growth that you have there, I don't think there are a lot of stocks which give you that sort of a growth with absolutely a clean balance sheet. So that is one strong buy for us.
JSW Infra is a strong buy for BNP. Priyankar, thank you very much. And keep coming back. We'll talk more in terms of other ideas, etc. as well. Appreciate your time here this morning on CNBC. Well, let's